Hey YouTube, this is Zach with Achilles Financial, and today I want to talk about Draftkings. The reason I want to highlight Draftkings once again is because this is a company who is growing exponentially, and they had another key catalyst yesterday in the form of New York State is legalizing online sports betting. The reason that this is important is because it's going to allow sports betting books like DraftKings to operate within the state at a much higher capability than they're currently able to do today, which is essentially non-existent. Now, New York is going to approach this slightly different than what we've seen in Michigan and Pennsylvania, where they are looking to basically utilize this system through the lottery system. So they're going to be looking for select partners to be able to effectively utilize, and they want to be able to capture some of that cash. DraftKings and Penn National Gaming are both two of the leaders in the space, and I anticipate that they will be utilized for the sports betting books. That being said, all of this is not going to occur until 2022. So I think that right now is a great time to continue to load up on DraftKings. From a fundamental perspective, I just want to highlight some of this income growth that they're currently experiencing. They grew total revenue by over 100%. However, they are actively paying for that. You can see some of the selling general admin expenses, just ginormous explosion from year over year, and you can see that reflected even here on the charts in the total net income. Again, they are essentially, at this point in time, for every dollar they bring in, they're having to pay 80 cents in terms of going out and marketing that. However, they have become a dominant name. They are becoming a dominant player in the space, and we're going to see that shift to profitability hopefully next year, 2022. That being said, right now we do have to deal with the fact that we are trading a company that is not profitable. However, they do have a lot of cash on hand. This is one of the reasons they went public, so that they can utilize this approach going forward. So I anticipate that this is going to be beneficial for them long term. And with those cash balances on hand, they have the capability to continue to operate at a deficit for the foreseeable future. That being said, again, if they don't achieve profitability next year, it may be time to reevaluate our thesis at that point in time. However, when we're looking at a valuation perspective, and I want to highlight again, because they are not profitable, they're not going to trade at a positive PE, price to earnings ratio, but they're trading right at a 40x price to sales ratio. However, they are growing exponentially. So if we keep the same price to sales percentage and they continue to grow at that same rate, again, they may hit $1 billion in sales this calendar year, then that means that the company is going to be trading at much closer to $100, which I know a lot of analysts out there currently have that price target of north of $100 per share. I'm a little bit more conservative. I think we're going to be closer to 90, but there's still a significant amount of upside from where we're at today. Keep in mind, this is stock we've been covering since it was under $40 a share. So let's continue to watch this, and again, I definitely want to continue to build a position here. What I don't want to see is another share offering. If they do another share offering, I will have a lot of concerns for this company, because right now they have the cash on hand and it can be tempting to go out and grab that easy money. But with all of the catalysts, including additional states going and legalizing sports betting, I think that this is a great opportunity to continue building a position in DraftKings. All that being said, we'll continue to talk about them in the Discord, which is in the link below. And if you have any questions, feel free to drop that there or in the comment section down below. And if you find this content helpful, please leave a like and subscribe.